Good morning, everybody, and this is your S&P setups for today, S&P 500. So, yeah, Friday was pretty much a big down day. I think the key here is if you just put a level on the top and the bottom of Friday, and we're on the daily at the moment, and you just look left, look at how many days that engulfing bar takes out. So it's basically let's just ignore that one, but it's 1, 2, 3, 4, 5, 6, 7, 8 days. So 8 days that it took out. Basically, when you look at the weekly, it became a red weekly bar. So the trend is still up on the weekly. On the daily, it's kind of in a range, and on the 8-hour, we're also in a range. So these are the levels I'll be paying attention to. Remember, on Friday morning, we were actually looking for a potential head and shoulders break, and that never really materialized. And the one thing that you do need to bear in mind is this is one of the big reasons why I always, when unsure, wait for the break and retest before committing to a position. So that kept me safe on Friday, to be honest, because it was looking like we had a change in direction brewing, but that very quickly fizzled out. So at the moment, range bound. We do have a host of data, and we've got the Feds coming out this week. So I suspect we're probably just going to muck around in this range until we get some sort of direction. And looking at the 3-hour, moving averages are flat at the moment. Range bound, not really interested in anything there. And if you look at what's happened here, we're getting to oversold territory. So I would expect us to bounce a little bit, but more than likely just range. So you can see how big the sell-off was on Friday. And we were above the moving averages. It was really looking solid after Thursday's move. It was looking really, really good. Any pullback was an opportunity to buy, and you can see how we just barreled through everything there. So I am of the opinion that we need to, if we're going to go short, then I would expect us to break through 44.50, but break through, come back and retest, then reject for the opportunity. You look at the oscillators, there's nothing really brewing here. And if I look higher up, you can see there are a couple of pin bars here. So there's some structure there, and there's some structure there. So there's the two areas where there is definitely structure. That's 44.76 and 44.66. So that's kind of the only opportunity that I can see, possibly a rejection off there for another retest of the low. And you're going to see that on the lower time frames. So I wouldn't be wanting to commit to any trades on the higher time frames, anything higher than the 15-minute. So that's kind of the structure that we've got. And then there's one more on the 15-minute that you also need to pay attention to. And that's that area there. So I would argue, get rid of this one. This is the area that you want to be paying attention to. It is 44.76 and 44.81. You're looking for a rejection there for a revisit of 44.50. That's kind of the only bit of structure I can see. If you do get above this zone and start building a base up here, you need to wait for the move up, pull back to find support, and then you probably be targeting this 4,500 area again. But anyway, I suspect it is going to be sideways. I don't think we're going to get any major movements until Wednesday when the Feds come out, and we know what most of the other data is telling us. So anyway, so I'm kind of looking for a few scalps. I think this is definitely a zone. If that gives way, then we'll just sit back patiently and wait for something better. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.